Good morning, everybody. Let's get the show on the road. Let me find this music. Crank it down, down, down. Thank you very much. All right. So we had retail sales today. White screen incoming. Core retail sales was up from last month's 0.5, but that was a negative number. You can see your positive 0.4, which that came right in at right at expectations. Typically, it's good. And then last month on retail sales, month over month, not the core. You can see you were negative 0.7 and you're positive 0.4. So, I mean, obviously Mother's Day was could have been a big factor in the reason why we got a good number there. But this morning I took a long on Bitcoin at 27,021 and currently watching pound yen, but I think the last time I looked at it, it was not doing so good. Yeah, kind of not really doing what we wanted it to do. So, I posted this right here, the near-term forward spread. This is something that is very important, like basically for the Fed and a lot of other investors. They look at this thing. You can clearly see that we're in levels down here at negative 2%. I mean, we haven't been there since the 80s. So here's your 01 market crash. There's your 08 market crash. There's your 2020 pandemic crash. But what I thought was interesting is Truth Capital said, curious to see unemployment numbers during those times might give us a better signal. The answer to that question is, in all cases, jobs was higher than we are now. So basically where we are now is 3.4. You can see the blue line down here. And let me pop this up over here. So September 73. Here it is, 73. So we go to September. You can see that you basically peak, but you're still higher than 3.4%. but you are coming down. So this would have been good, right? This would have been good for that time. And then October, boom, straight up with the unemployment. And remember that September 73, it's here, right? I can't, this tool sucks, but it's right there on that peak, that low peak spike at negative 2%. And then in the 80s, oh, and also if we look at that versus, what was that? September 73, October 73 is when we start that spike. Come over here and look at October 73. October 73 is right. Oh, wait, that's 72. There's your October 73 right here. So price comes down, pulls up, October 73. Remember, that's when job numbers spiked, or unemployment rate spiked to the upside. Boom, market drops. So if we take a percentage from that and go to here, you can see that's a 45% drop. And then we want to look at Jan 81 unemployment rates, because that's also Jan 81 is this stuff here. Jan 81. Right there. Still a high, much higher than where we are at 3.4. But it wasn't long after that. Boom, spike. So let's go look at Jan 81. On the SPX. Sorry, I was distracted there. Jan 81, November 80, November 80, December. Here's Jan 81, similar thing. You get a little, this is a weekly time frame, so you get a little pullback and then boom, pull back up. At this time, that would have been all-time highs. Jan 81. And then job numbers, we know, spiked to the upside. Then you had a 23% sell-off. I mean, it goes on and on and on, right? So I didn't look at the unemployment numbers or the jobs numbers and the market until he whatever said to look at it. Truth Capital said to take a look at it. So yeah, it doesn't look good. We know that the unemployment numbers spiked, you know what I mean? Basically, for the rest of them, right? So, yeah, '08 job numbers, we had that, and then over here, go way over at this point. There's your '07, and then '08, boom, unemployment rate goes skyrocketing. And then everybody remembers the pandemic. Everything's good, and then boom, right? So here we are again. But this time we're at lower numbers than we've seen since October 68, and then December 68, January, February 69. So you can see that this thing traded, or not traded, but you had an unemployment rate that was roughly 3.4% from August 68 all the way to June 69. So over a year, it stayed at those levels. And then we have a little spike here to the downside on this, but nothing major, right? Nothing major on that. So, but the market did in fact sell off there as well. Once this started to go up, the market sold off. So, yeah, I mean, if they keep hiking interest rates, that's what they're literally trying to do. They have a number. Their number is set at like 4.6 or 4.4. I can't remember exactly what number they're expecting the unemployment rate to go up, but you can see that basically in all of almost all in history, basically every time we get an unemployment spike, that's when the markets come off. And the markets have been trading flat. I posted core data yesterday. Retail, not what that's Bitcoin, but this is the S&P 500. Basically, you can see the green line is your funds, your money managers. The blue line is retail. So blue retail is short here, not as short as money managers, right? And then the red line is your dealers, your market makers and stuff like that, right? They don't really count because they're not they're not directional biased, right? They don't I can't explain it. They don't make money on market direction. They make money off spreads and selling you puts and calls and stuff like that. But the money managers is the ones we like to track because if they're short, here's your '08. You can see how short it was then. We are more short now than they were back before the '08 crash. But they don't always get it right. Here, right before 2012, they were short. Right in here, they were short. And you can see what happened after, right? A big run higher, boom, and then they got long. So they literally started the short squeeze. Retail was short as well because retail loves to short tops, right? And that created a short squeeze. This is a weekly chart. This is your weekly chart. Weekly candles or weekly bars. So we have a lot of things showing us and hinting to the point or to the fact that we could indeed be seeing a collapse in market prices soon. Here is Bitcoin. This is a CME futures. Unfortunately, there's too many exchanges for me to get COT data, right? So in order to get COT data, which is just the commitment of traders report, you have to look at CMEs, and you can see that money managers were getting long right in here. This is where we started to get long as well, right? And then we had the FTX debacle, but that didn't matter for us. We bought January the 1st. And so now, since as price goes up, some of them lost money, obviously, because you see a sharp, sharp fall right after. So this is probably capitulation, especially if they bought over in here and then this happened, right? So just before December 22, they got back to almost neutral. And then they started to sell as time went on. And you can see now they're starting another up. They were right in here in this little dip. That's the top. That's when they were the shortest. And now this updates every Friday. We got another tick down. So it does look like your money managers and everything like that, there's their position short. So if we could get a bullish move, that could absolutely cause a short squeeze. So this would be good for the markets as long as the jobs stay good, unemployment rate stays low. I mean, as low as it is now, like I said, you're at levels that you have not been since the 60s and 69 and the 70s, right? So that the economy was doing good back then. So I mean, this is the reason that markets, in my opinion, have not crapped the bed just yet. It's based on that unemployment number. So yeah, we want to keep a close eye on non-farm payrolls. Unemployment is the number that we want to keep our eyes on mostly. But the jobs number that we got last week suggested that we might see an uptick, or we did see an uptick as far as people going to the unemployment office. That number was a little bit higher, so that could be the start of it. I think that's why we haven't really seen any bullish pressure lately. Also, you got fears of recession being talked about all the time. And let's not forget, what's going on right now with the United States of America potentially defaulting on their debt with this debacle. So it's keeping the markets very sideways and Bitcoin very bearish. So I did take a long just based on the fact that yesterday was bullish. We hit 2021's low to perfection, and that's when we pulled back. Basically, I was just looking at maybe we get a bounce based off of the news this morning. And if we go into the hourly chart, you can see that position is not doing so good as it is back down to my entry. Hasn't stopped me out just yet, but it's not looking great. Pound yen, we were potentially watching this for a short. Obviously, it's gotten a nice a nice bounce off the news. We were just basically, obviously this thing is bullish, so we were just looking for a day trade. Here you can see, a massive trend to the upside. Last 2 weeks were bearish. This is just a pullback, but I was looking for a bounce off of that level. So basically what I was looking for was price to trade up to it. And then on this signal right here, I was looking to get short at resistance right there. You could see that this candle traded down to this resistance and is getting a push, making a fresh daily high. So if it's going to roll over, it may do it now. But clearly, like I said, obviously this thing is bullish. We don't necessarily want them to be shorting bullish assets. It's bullish on everything you look at. It's bullish if you look at it on the daily. It's bullish if you look at it on the weekly. Very bullish. See, this is another reason why I was looking for a pullback. We are extremely stretched out from the weekly 21 exponential moving average, and you could still see it pull back in the next few weeks. Who knows? I'm just early, maybe, right? Just a little bit early. That happens. Pepe USDT, I got that pulled up over here for everybody who been participating in this asset. You probably got killed, especially if you participated in the last 2 up days, because you have lost all of it. Basically all of it. Like, it was a meme coin, and you can see you pulled back to old resistance here. This is areas where you would have looking to be a buyer. And then obviously this is where you would have been looking to be a seller. That is your range. Boom, boom. We talk about this stuff almost every single time we do a video or a live stream. I am very consistent in the way that I show you guys how to look for trades. Right? So if you would have bought, at 11,762 and then sold at 200,587, that would have been a nice return. But ultimately, it looks like it's going to fall back down. 68% range. Not bad. Not bad at all. But remember, you don't take the first test of that level. You must wait. Must wait. This is what it looked like. All right, so if you'd have bought the first tag of the level, depending on where you put your stop, you might have been stopped out. Then if you would have tried to buy a retest, you would have gotten stopped out. That would have been the opportunity, right? You wait. If the trade goes without you, it goes without you. But in a lot of cases, these levels are going to attract price. You're going to get multiple shots at it. In some cases, you're going to get multiple days, right? Multiple days to take a chance at it. But it only took 1 day for it to find support there, and then up it went. And it went up quickly. So there it is, and there's where you currently are. So people are probably going to try to buy like a 50% retrace from this range. I wouldn't. You know what I mean? This most of the people that were basically controlling the controlling interest, if you will, has already sold. That thing was a 3,000% move to the upside. You know damn well that the owners have sold. So yeah, 27,021 is my long entry on Bitcoin. I'm looking for it to get above the point of control, because if it can get above the point of control, then we know that whoever was selling here will get stopped out, and that could cause a short squeeze. And I'm only looking for my target to be 27 to 64. If I get up there, then I will take 2/3 of the position off, move my stop to break even, and then see what happens. All right. That's just under the high of day. That is your resistance, intraday resistance. But first, it's got to get out of this area it's trading in, as it looks like there's heavy selling going on there. All right. Living in the south of the Netherlands, always warm. The Netherlands is always warm. I didn't know that. I would have assumed it was very cold and rainy, kind of like Ireland. Good morning from Panama. Beautiful place. I've been there. Beautiful, beautiful. Buenos, Buenvenidos. I don't know what that means. The best in the house is Roland. Thank you very much, my friend. I really appreciate that. Muchas gracias. The music is awesome. Thank you. You sounded like DJ Premier. I can tell you who it was in both cases, both songs. Times Passing was the first song. The name was Times Passing. And if you look that up on YouTube, it's going to be Blue Steel, Cushy, and Dama Beats. All three of those guys come together to make that song. And then Big Big Man is the second one. This one. That one is called Big Big Man, and that's Bonkers Beat Club is the people that made that. Bonkers Beat Club. All right. You can just overlay on the chart. Yeah, I know you can do an overlay on the chart. Thank you for that. But I know that. I know that. And they're probably referring to when I was going back and forth from the jobs number or the unemployment number to the S&P 500. It just sometimes it's a lot clearer looking at it when you're looking at one against the other, whereas overlaying the unemployment rate. And I'm not even sure what the ticker is. So we could have just done it that way, I guess. And then overlay it with the S&P 500. No, it didn't work. There it is. But we don't want the unemployment rate. We want, that's not the unemployment rate. That was the interest rate or inflation rate. So that's what he's talking about. Big spike. So yeah, I mean, it could, that's what they're saying, right? The recession could take time. I mean, if you just look at the yield curve inversion, it's still really, really bad. There's your 10-year, 2-year yield curve inversion. The dotted line is 0. So in a lot of cases, you don't get your recession. Here was the last time that we got that inversion, and you didn't get the recession until the pandemic, right? So long time after, right? It's a monthly basis here. If you look a year and a half later, after you get back to the 0 line, it could be a year. So like I said at the beginning of the year, sideways markets mostly, probably, since we had a big trending move up, then all of 2022 was a bear market. Bitcoin's about to take me out here. Let me see here. It's trying to take me out. This white line is my entry. And my stop loss is setting just under this green candle's low. So my stop is like right in there. It almost got me this last hour, but it didn't. So like I said, there's a lot of selling going on right here. I don't know why there's a lot of selling going on right here. It's literally the middle of the range, but that's where the most of the volume is, the middle of the range. For it to go down and make a fresh daily low, that would be a significant down move. It looked to me like it would have caught a bid off of the news, but it didn't, or it isn't yet. Here is the DXY. Check that out. See, it had a nice move to the downside once the news came out, but it did ultimately close up on the hour. The DXY has been bullish the last 2 days, to be looked at as a pullback only. You broke out of a descending wedge pattern, but basically, if you look at how it's been bullish for like a week, a little over a week. Last week, they really started hammering down with the debt ceiling talks. And since Biden didn't really do anything, that's basically where you've seen a spike in the dollar. So a spike in the dollar is naturally going to cause Bitcoin prices to go lower. That is if the dollar is stronger than Bitcoin. All right, the dollar can go up and Bitcoin can go up with the dollar, but that's because Bitcoin is stronger than the dollar. In most cases, they are inverted, if you will. So you're getting a bullish spike on the dollar right now, and Bitcoin is getting a bearish spike. So it does look like it wants to go down and stop me out. We're 30 minutes, almost 30 minutes into the market open. So yeah, it's typically what happens. Let's look at risk. Risk is pretty bearish. Everything looks bearish, except Apple. Apple was bearish yesterday, but this must be intraday. No, that was yesterday. Oh, I see this new day here. So you might take out yesterday's high and then roll over on Apple. So we can watch that. Another bearish signal. Well, we got this here. Doesn't look good. This is just on the day. So far, it's going lower. But this thing can reverse. You can reverse, right? So yesterday was really bullish for the SPY. Today, not so much. Let's check out the SPY. Yeah, yesterday you were nice and bullish, and then this is today's price action on the S&P 500. These are 15-minute candles. Oh, basically chopping, man. Chopping. Range is getting tighter. Ultimately, one of these things is going to fall down. Google's getting a nice bullish push. Let's pull up Goog. Yeah, be careful. You take out yesterday's high, you could see a reversal. I don't know how to draw lines on this charting system, so we'll go over here. Apple, same scenario. Watch out for that high. Yesterday's open, which would be there maybe. Yeah, yesterday's open is right here. So that could also act as resistance. We just don't know. Google. If you're bearish, that's the trade you want to take. Same scenario. Yesterday's open, though, on Google was all the way down there. So Google may be looking to run above the high of yesterday. Yesterday was a bullish outside day. You took out the previous day's low and the previous day's high. And, well, you pulled back basically all of this, and you pulled back. So if Google can continue with bullish price action above yesterday's high, then I would leave it alone. It will probably actually turn the S&P 500 back to the upside. So here it goes. That is the price. You got to see bullish price action above that. It does look like it's SPY's only down 0.34%. It doesn't have to get up there either. But that's the area I would wait for. I wouldn't make a move on it unless it took out that level, because that's an objective price point. Just taking a short here there is no objectivity there. So you're above any objective level that we would look to, even on the weekly time frame. You're above any objective level. Last week's high there. You took out last week's high yesterday. So that would have been good enough to see the price roll over. But remember, maybe it's trying to get yesterday's shorts before it goes lower. But I mean, it's been pretty damn bullish. It's like there's only a handful of stocks that's keeping the S&P 500 up, guys. So be very careful. Only a handful of stocks. That must be a daily level. Yeah, daily resistance. But we're probably going to see, well, no, the Bollinger Bands are still pretty extended. But they lag price, so it's this up move right here from the yearly open test. That's the volatility. That's why it's so wide from there to there. So you're trading very, very tight for the last several days. Very, very sideways, boring trading. But there is money to be made in situations like this. You got the 20 simple basically holding a support. You can see barely an uptick there from yesterday's bullish candle. So this might be the area to look to get long on the S&P 500 if you think it's going to go up. I have been stopped out on my Bitcoin position. So once again, probably just early. All right, so Bitcoin looks like it's headed to weekly support. This is daily support on the S&P index. So let's go get weekly support on Bitcoin. It's here. So this is the area where I should have gotten long, not here at hourly support. This is weekly support right there. Also, that's this week's open. And on Tuesdays, we typically look for the low of the week to be put in or the high of the week to be put in. So if the high of the week is already in, that's going to be there. We'll see how it reacts. If we get a bullish engulfing candle here, then next hour we can look for a retest of support. We leave this as support, even though you got a clear breakdown here. We do not make this support until this candle closes. The reason for that is because of what I just said. This could literally close up here, right? If it does, then the next hour, we would look for a pullback to this. So you would love to see a spike above and then a closure somewhere in here. And then the next hour, give us that pullback to the original support. And then we can look for bullish entries. If this candle closes bearish, then we've broken down and we're no longer looking for bullish entries. And if you start trending under this, then that means you are bearish on the week. So here's your weekly high. You're not trading. I mean, from your open to high, that's not a very big range. It's just tight trading. And you're trending lower. So the typical response would have been looking for shorts. But that would have been the short entry. Today, there was no short entry. Right? This stopped anybody that got short today out. Also closing above the last resistance. So giving you kind of a sideways vibe there, or making it impossible to get a short entry. That would have been the short entry. The reason is simple. You're trending under the 21 exponential moving average, and every spike in price in this trend is moving lower. This Bollinger Band is set on the daily time frame. All right, that's why it looks so wide. It's the daily time frame. But generally, when you're trending, you'll stay close to the outer bounds of the Bollinger Band. So when you're trending up, for instance, you'll stay really close to the upper edge of the Bollinger Band. See that? I mean, these are hourly candles, but it's intraday price action. And then this is when you start trading sideways. Then you get the breakout. Then you get a reversal back down to the bottom end. And then here we are. But you are starting to see a slight move lower. It just depends on where it closes today. It's trending lower, so you typically want to look to sell pops in price. That pop is already taken in account. Me trying to take along here is against the trend. On the daily and the weekly, you are trending lower on Bitcoin. Slowly but surely. Another reason why I like try to just, keep an open mind that we may continue higher here is because we did liquidate this swing low. And this swing low is important because it's the lowest swing low in this range. So if you start from here and go all the way to here, you can see that range, right? It's something like that, like a dirty range here. right? Something like that. That's basically your overall range. So this was the lowest spike in that range, and also it correlates with that wick there. So yeah, I mean, if it can stay above that, then maybe we can see it go back, trade back to the top end of the range. But that's just hopium, right? That's hope. That's just hope. We don't want to see Bitcoin go lower. We want it to go higher, but it's probably going to follow the markets. It's been leading the markets up until now. So the NASDAQ has been trending higher. That's based on tech, because tech has been going higher. We'll go to the sectors. I'll show you to prove it. There's your tech sector. Go to the daily. Here's your yearly open right there. You're trending up. You've liquidated swing highs multiple times. So if you were going to roll over, it would have been then, but the pullback was bought. That's typically how uptrends work. Tech is basically, holding the cues up. The S&P 500, not so much. Very boring trading. Last week we had good data, and we still didn't get no really good, strong, bullish reaction like I thought we would. So the sellers are piling in. This is a daily time frame here. Your pattern traders are going to see a head and shoulders. All right. Something like that. So they're going to be looking for shorts. And we already know based on COT data that the market is shorter than it was back in 08. So we need some really good news to get a spike above 41.94, as there's a lot of money on the side. A lot of investors missed this rally. They missed this opportunity also to get long. So there's still a ton of money on the side. I think if you can get above and hold above $4,200, I think you'll see that new money come in. Or that money that was on the side. I do not like the fact that we broke above resistance and instantly sold off. This was a big down move, but it closed back up at support. And then last week we closed under support, but in a very tight range. So as far as a sell-off goes, it doesn't look bad. But the fact that you broke out above resistance on a strong bullish candle, and this price action literally came in the last 2 days of that week. Thursday and Friday was very bullish and closed the week out strong. And the very next week, you get a complete retracement of that move. And then since we've been trading sideways. So although it's not terribly bearish, it does look like it is struggling. This made that breakout a trap. So sellers are going to be looking to sell right there at 41.47. Let me see if I can get that on the SPY. The SPY's cheaper. Yeah, it's not exactly the same. You got a little bit of a wick above, but there's Friday. Monday, we opened under it, traded down, then ended up closing above it. Today, we opened lower, traded up to it, and that's where the sell side came in. And then there you go. So here's your open. You trade it up to that level, and now you're trading away from it. Bitcoin's coming to the weekly open. It's weekly open. So we'll see. It looks like you're going to see downside continuation. So probably will not be looking for bullish entries after this. Euro USD, what's it doing? It's trending lower. That's based on the dollar stalling out at support. Euro stalled out at resistance and is rolling over. I did short the pound. I don't know. I just screwed that up. Basically, right there's where I got short on the pound. So that trade's still working out so far. And your VIX is up 4%. So let's pull up VIX calls and see if they've changed. I doubt it. Oh, that's Google. Well, here, let me just show you, because a lot of people don't understand what I'm talking about when I say the difference in. So, like, you can see in the money, this is Google. This is at the money. This is in the money. This is out of the money. But the one strike out of the money is considered at the money. All right, ATM. And then next, everything else under it is out of the money, in the money, out of the money. But right at is at. So that's at the money. So when you're at the money, puts and calls are very similar in price, right? Obviously, the calls are a little bit more expensive than the puts. And the fact that 230 is what you would pay for the premium. And then if you were to buy the calls, you would pay 254. So, you know what, 15 cents more. So there's a little bit more demand in Google calls. Let's go to the VIX. $28 days out. Look at the difference. Out at the money calls are $3, whereas at the money puts are 43 cents. Huge, huge spread. I don't know why this isn't pulling up. If we go out further, let's go out 35 days. Look at the volume. Open interest. 35 days out. So a little over a month. $3.15 is at the money calls. 39 cents at the money puts. You can see the open interest out of the money calls. There's 538 contracts of open interest there. But since that's $30 and you're only a month out, I would suggest that most of this is premium selling. When your premium is this high, 93%, that is your that's the implied volatility. So that's what makes the premium more expensive, is the implied volatility. When you have a high implied volatility, usually selling whichever one is the most, has the most demand, you go far out the money and sell because you can make decent money doing that. depending on how many contracts you you sell, right? But usually this is done with spreads, or they just are like, they're not looking to be a buyer of uh $30 calls. So they are more than likely are just selling that premium, and they use the money they made on that sell to probably buy like in the money calls, right? To help finance the trade. That's what a lot of people do. They'll sell premium and they'll use the money they make on that premium sell to then go out and purchase something else. So, yeah, but it does look like there's a lot of open interest in and way out of the money. Like down here, that's $40. 412 contracts. That's likely selling options. Can we look at Aussie yen, please? Yes. But it does look like people are getting ready for a massive move to the downside in the S&P 500 as they are gearing up with VIX calls. So if you're long the S&P 500, like if you hold a long-term account, like at your retirement fund or whatever, it wouldn't hurt to buy a few of those calls. Not a whole bunch, but a few of them out of the money. I would go out though probably a couple months. That's going to make the premium a lot more expensive. They don't even have any weeklies at 63, in between 35 and 63 days. But still, 63 days, there's still a lot of open interest inside of the VIX calls side. And I would buy like 63 days out. That gives you 2 months for the VIX to get up to like 25 or $26. If it is going to happen in the next 3 months, that's the next 2 months. That's the bad thing. We don't know when it's going to happen, but it looks like it's going to happen soon by the implied volatility on the VIX. Aussie yen is trading in a shitty range. So you're in a weekly range, but this weekly candle's big from high to low. Your body's not so big. You can see last week, even though you did trade outside of the open and close of this candle, you ended up closing in the range. So, I mean, you're bullish. Let's see, you're above the yearly opening range. So, although you're bullish, this is the weekly time frame, and you're just above the weekly 21. So, I would look for bullish entries on it, unfortunately. Let's see where you are. Yeah, I mean, you got to look for bullish entries as long as you're trading above support here. 91.62. I know we were looking for shorts, but I mean that was a pretty big move to the upside. And what did pound yen do? Did it ultimately go ahead on up and I think, I mean, I don't know. I don't see a trade on it today. You're failing there for now. That's weekly resistance, but you're bullish on the week. Keep that in mind. You're bullish on the week. But it does look like you've topped out. But on the daily, it doesn't look bad. Yesterday, you closed well above the week. This one's a difficult trade, Michelle. This one's difficult because you're in the middle of the range. You're not so much in the middle of the range. I mean, you're closer to the top of the range of the weekly range. But you can see how you got two bullish daily closes above that. This is going to be another one that people are going to say is a head and shoulders. Intraday, I don't see a setup on it. I mean, if you get back up here and you fail, then maybe you could take a short and target right in here, 97.2. That's the hourly Heath level. Because this broke down, and then this is your reaction. So I would be more amped, more keen to look for bullish entries. But resistance being right there, I don't know if I would either. See, pound yen did the same thing. That's why I was looking for shorts there on pound yen, because based on that weekly. But yesterday it closed above, but closed under the daily supply zone. So I was looking for shorts, but this thing has, it had its move lower right there. So I was looking for this to be a pullback. This is your London session. Low was put in during the London session. So I shouldn't have been looking for shorts here since the low was put in during the London session. I should have been looking to buy there. But being right at weekly resistance, it makes it a tough trade. Because even though you're breaking out intraday, anytime today, later on, like 2, 3 o'clock, this thing could just drop. Makes it a very difficult trade. Heath, Aussie mining stocks have had a pullback. Was wondering if it could be a good time to buy. Wondering if you could take a look at Rio and on the ASX. I don't know if I have data for that. I do. You're trading under the yearly opening range. So you broke down and you're getting continuation. You might find support here based on the monthly 21 exponential moving average, but it hasn't been very helpful for the last couple years. You see what I mean? Like the 21 did not hold here as resistance. It broke right through it. It did hold here as support, hold there as support, but then you were stopped out the very next month, and then it broke down. So was not helpful through this period, was not helpful there. Did you take out that? What's the high on that? 128.55, 128.78. So you did take out the high. You took out this high on this month, and then you rolled over. So it probably wants to stay in the range, man. I mean, there's the range. If it finds support, let it find support first. It's not finding support yet. It may be finding support now. But, I mean, this was support, and then you broke down and closed under. So you might be finding support pretty soon. This was an area of demand. So we'll see if 107.96 holds support. You've already tested it this week or last week. Yesterday you opened, you traded down to it, not all the way to it, but close to it. Then you got a big bounce. I'm guessing pre-market or like during the Asian and London session. You got a big bounce because you opened up there. But I'm not sure if this thing opens at the same time. No, see, it says right now that it's 1:55 in the morning. Is it even trading? Why would it close at 1:55 in the morning? And it opened back at 8. So that confuses me, dude. I ain't gonna lie. Hey, your market's closed. Yeah. Just watch 107.96. If you close this week under there, then it hasn't found support yet. You need to get a close above this before you can consider it support. So, I mean, if you want a chance to trade at one, if you want a chance to trade or an entry at 107.96, as long as you don't use leverage, I don't see a problem with that. But if you're looking to trade this with leverage, you need to let price basically confirm that level by setting it as support. And then you wait for the stop loss or the stop run and then look for the entry. Once support has been, set in stone, so to speak. On the 4-hour, it looks terrible. On the 4-hour, you got a death cross right there. But I don't really care about intraday death crosses. I mean, it looks bad on the daily too, but this could be just a bear trap that's lasted for, what, 15 days? It doesn't look bullish. You closed right at daily support. So that would be daily support. You closed right at it. You haven't gotten a death cross yet, but on the daily, I don't trade death crosses usually because I don't know. It would take a lot more day. You're just gonna miss the signal, right? By the time the death cross actually occurs, price will be way down here because moving averages lag price. I would be more inclined to sell this at resistance. Like I would be looking for sells at 110.91 or even as high as 112.10. But as long as this holds, yeah, you can look to be a buyer, but I wouldn't be looking like if you use leverage, the top of the range is going to be 111.04. Stop under a stop under that wick right there. So you want to see it open above 108.77. Intraday, you want to see a pullback to 108.77, and you want to see a bounce from 108.77. If you get that, then you can take an intraday long and potentially target 110.38. Yeah, that's about all I got on it. I think a better entry is after liquidating the low of day. Yeah, it depends on what asset on Bitcoin. Gotcha. Yeah, here's the thing though. That low of day is so far down. I wouldn't consider it um like I wouldn't be a buyer of that, right? Well, hang on there. Yeah, it could potentially be a buying opportunity. Now, this is what I want to see, bro. If it gets down there today, which this is weekly support, it's your weekly opening price. So you may struggle here, but if it gets down there, I do not want to see it close under it on an hourly closing basis. I want to see a wick under it and then an instant reversal. And I want to see that reversal have some strength to it. I don't want to see a reversal up to here and then a close like in here, right? We'll watch it today because even though I'm not live, I'm still watching price with you guys all day long. Right? So we'll keep an eye on it on the low day. If it gets down there and rejects and gives us any kind of bullish momentum, we can look to buy retests of 26,929, which obviously that price is going to be different depending on what platform you're trading on. But the candle structure should be the same. Pretty damn close to the same. Like this is the opening price right there. That's your daily open. So at 8 p.m. yesterday, you had an open, you pushed down, then you pushed up, closed higher, opened right there. The very next hour, pushed up a little bit and collapsed. Boom. And then that basically set the low of day, and you've been trading sideways ever since. Nice push to the upside here. This would have been a selling opportunity. It's just under the high of day. That's your high of day. Right there. See? So you didn't run above the high of day either. So if you'd have been waiting for a liquidation above today's high to get short, you would have missed the trade. It didn't happen. So this would have been a difficult entry. I would not have been able to take this short based on the fact that it did not stop at any objective level. It did not liquidate the high of day, and it closed at a random price. Just some random price. We'll keep our eyes open on it. Like I said, though, I mean, the near-term trend is down. If you look at the last 3 days, always, guys, the order flow for the last 3 days is basically all you need to keep. Last 3 day session, you were bullish. You closed under this one, though. You're trading inside that 3 day range. Go to the daily. So the last 3 days have been bullish, or the last 2 days. It does look like you've got a turn in the market here. That's why I'm so interested in this price. That's the weekly open. And if you are going to continue, the weekly low is there. Because this is, why does it say that's the weekly open? Oh, I know why. I got that on. I got that on last week's close. That, so it's saying the open was on Monday. not Sunday, which is false. It opened on Sunday. I guess it would be right. I mean, Saturday you closed there, Sunday. So Saturday night you opened here at 8 p.m. So that would be right. That is the weekly open. Right there's your weekly open. So that's right. All right. Yeah, that's why I'm watching this price. It's the weekly open. And yeah, it looks like a lot of selling pressure because you got a long wick, but I see a target. That's a bullish target for me. That is, of course, as long as we don't close a daily under this low right here. If you close a daily under this low right there, then that's going to be your weekly high more than likely. And your next bearish target would be that right there. I have no idea what this line is. Oh, that's that line that I marked out with that hourly. Yeah, this stuff over here. So we'll see if the market's turning around or not. I want to see this area hold as support. So we'll watch it for sure. Because this might be a buying opportunity on Bitcoin. Buying the weekly open is okay. I mean, it's a decent reward to risk, right? You're risking the low of the week. Right there's the low of the week. So if we set this up for a weekly trade, that's what it would look like. Here's your stop. There is your take profit. So for a weekly trade setup, you could simply buy it where it is now, put your stop under there. Then again, if you want to wait for a run below that and then wait for it to get back above this to be the buyer, that might not be such a bad idea either, because if you do get a run below this low and then price does get back above this, that could be consistent with, just a stop run. Then put your stop under that low. But it's a decent setup nonetheless. You're close to the low of the week. You ain't going to be buying the low of the week, but you could be buying close to the low of the week. And we look for reversals to happen usually on Tuesdays. So although it opened, moved up, and came all the way back down, it still could be, the week could end up closing up here if it's going to be extremely bullish. I wouldn't look for that. You don't expect that to happen. But if you're looking for a weekly setup, that's the trade. And it's a 3-to-1 risk to reward. You're just simply buying the open, and then you're taking profits just before you get to the weekly high. And like I said, if you just put your stop under there, it's a 3.31 risk to reward. So it's better than 2-to-1 risk to reward. I don't like the fact that last week closed below support. This looks like a pullback, right? That looks like the selling opportunity, which that would have been yesterday. But like I said again, yesterday you closed at a random level. I mean, you pulled up to a random level. It was close to the midpoint or above the midpoint, but still random, right? I guess one could argue and say that that's the reason right there. That weekly low, which is also the 100 exponential moving average. The price is melting. So you're literally, this trade would not be as highly probable simply because you're last week you closed under support. So it looks like the risk is to the downside, not the upside. Um, and you're bearish on the month too. You're bearish on the month, and last week you were bearish. So, I mean, you're under this white line, you're bearish on the week as well. But if it is going to be a market reversal, this is a good area for it to occur. And that's what you're looking at. All right. Yeah, that's about as good as I can go. I mean, on Bitcoin, it's this looks weird, but this was weird too, right? It's making trading difficult for sure. Well, we need to see risk get bullish and stay bullish. We don't want to see this thing break down today. We want to see it close strong. We want to see a short squeeze starting to commence. We should have seen it. When you get a short squeeze, you get candles like this, not little itty bitty candles like that. You want to see big, strong closes. That basically shows you that stops are getting wrecked. Also got supply here. We'll see what happens. All right, let me see here. Once you showed a website where there are pops and lock, what was the name, please? What? Once you showed a website where there are pops and lock, what was the name? I'm not sure I'm not sure what you're asking, Eli or Ellie. I'm not sure what you're asking. Interesting 15-minute W and head and shoulders. Stocks. Pops and lock though. That's what I'm not getting that. Like I don't know what you mean by pops and lock. Yeah, it's not coming to me. Pops and lock. If anybody else knows what they're talking about, let me know and I'll pull it up. Can we see NTR upside and downside at opening? Huh. I'm not sure. I'm still not sure. Maybe the VIX. I don't know. But they said website. I mean, that's the VIX. Usually, like if I'm talking stocks, it's on TD Ameritrade's Thinkorswim platform. This platform, it's not a website, it's a platform. They do have a website though, but this is a platform. I mean, it has charts too. Maybe this, uh, that weekly opening range, or the week, or the options. If maybe this is what you're talking about, it's not that. All right, I don't know. I'm so sorry. I don't know what pops and locks, what website. Um, it usually, if I'm talking about stocks, I'm looking at options expected ranges. That's this, but that's just a tool on the platform. Apologies. Maybe it'll come to me later. You can. There's a website called barchart.com. It has really good info. It's free. That's also like right here where I get the commitment of traders stuff is on the bar chart. And I don't have no internet. Google's doing that thing again, where it's not letting me pull up anything. Let me see if I can go into this. We got a nice spike up on 10,000 Bitcoin addresses on this push lower. That might do some good to hold some support. Brian says December VIX calls. Yeah, there's a much bigger discrepancy, man. 60 cents on the put side and $6.75 on the call side. The open interest isn't as big as 2-3 months out, or 1 month and 2 months out, but it's starting to build up. Yeah, if you're gonna sell, I mean, you could sell that, but you're looking at that one. But that's it says it's 217 days away. That can't be right. I guess it could be right. August is 91 days out. September is 126. It says the 20th of December, 2023. Yeah, there's a lot of premium, but that's 57% implied volatility on that strike too. So if anything, the VIX is actually anticipating a decline in premium after July. So here's what I'm talking about. So the options market is literally pricing in a lot of volatility up until about June. Then it starts dropping. September 69, 64. And then in November, you're under 60% implied volatility. So it looks like the options market is pricing in, if we're going to see a recession, it's going to be soon. That's what it looks like to me. But the options market isn't as good as pricing out, that far too. So, and that can change, obviously, if we do get a big down move. If some big news comes out and crushes the marketplace, that will all change. All of that implied volatility will be gone. Let's look at Tesla real quick, see what it's doing today. Figured it would have liked the fact that Elon is putting someone else. But like I said, be careful of buying it up there because you're in a downtrend, so pops and price are getting sold into. You did end up closing that gap to the upside, but you sold off instantly. So even though it's bullish today, I think it'll be pretty good. If you get back up to 172.08 on Tesla, you might want to look for shorts. And then again, right here, you could start looking for shorts. Right there is your daily supply. That has been tested already. So we'll see. All right. Thanks for answering my question. You're welcome. Thanks a ton. You're welcome. Can we see NTR, nutrient, a fertilizer miner on the weekly? NTR. Nutrient, a fertilizer miner. Fertilizer is mined? Huh. I didn't know that. I mean, just for seasonality, you think it would be getting a bounce coming into spring. Fertilizer, that's basically when you start using fertilizer, is when you plant stuff. You start planting stuff in the spring, but you're not getting that seasonality bounce. Nitrogen and potash. Got you. Got you. Something I did not know. But you would think you would get a seasonality bounce on that based solely on that. You're not getting it yet. That's a big support there. Here. You can see how that acted as resistance. And it is off an objective price. It's not just a random price. It's this week's close right there. All right. So if you close a weekly under 59.33, leave it alone. But if it's going to bounce, I would want to see it bounce here. It's also, it's the first time that you've retested this price since the breakout. And like I said, if I put a horizontal line there on that price, You can clearly see that it was resistance there. Resistance there. There's the breakout. There's a bear trap. And then boom. So now this is the very first time that you've traded back to that level since breaking out. And this held as support for many weeks. Weeks. So the breakout occurred in May. And then you didn't leave that area until September. So from May to September, you played around on this price. So I don't want to see a weekly close under that. If you do get a weekly close under it, like you did here, I want to see it get back above. And you don't want to see another weekly close under it. All right, so you could get one weekly close under it and then price get back above it. If that occurs, I would buy that all day long, 59.33. It doesn't look like it's doing very good right now because there's quite a bit of bearish momentum coming into the level, but at the same time, I mean, for the last 4 weeks, boom, boom, boom. And that's coming off of a pretty good sized down move with 2 weeks of pullback, 2 bullish weeks. So literally this thing's been in a downtrend since February. And you're obviously under your yearly opening range. But this could be, you could be setting 2023's low with this move here. So watch 59.33 and watch weekly closes under it. If that occurs, then I definitely would have traded it for the bounce on the first attempt, but just for a day trade. You close the gap. There's the gap. It's closed with this hour. You literally closed the gap today and then you fell. So give it some time to see if this will act as support, but that's definitely the level I like to be a buyer as long as support holds. It seems like I said though, I mean they got beat on earnings too. Do they do good? It's a dividend stock as well. Miss, beat, miss, beat, miss, beat. Looks like they beat more than they miss, but I would say this had to do with everything bullish, right? Everything was bullish during zero interest rate environment. Everything was bullish. I don't know what sector this stock is in. Do you guys know what sector it's in? Now look at QG1 natty gas futures. QG1. I've never seen that one. I don't have that one on my natty gas. I have natgas.f. QG1 exclamation point. That's added. Nat gas has suffered. A lot of people have been looking to be a buyer of nat gas. This is a fund. And then this is an ETF. Jesus, that thing has gotten killed. I don't know why nat gas got destroyed so bad, but it got literally destroyed. All right, so it looks like the level it's trying to hold is this level here. The same thing goes for this. If you're closing weeklies under 205, you're going lower, and that's a very scary and unfortunate thing. I don't think natural gas would go to zero. I mean, people use it, so I don't understand how there can be that much supply of natural gas out there and no demand for it. Like none. You're at an area that I would consider a buying area. All right. But the problem is if you're trading with futures, you're using leverage. But I would look at this area here, like as the MVRVZ score, if you will, that we look at on Bitcoin, right? Basically, anytime you've gotten in this area, it has been an area to be a buyer. But obviously, you can go lower, much lower. But you can just basically see that's like every time it's gotten in there, you've gotten bullish bounces. These are weekly charts, so you're literally looking at years worth of price action. There's quarterly charts. You literally closed at a quarterly Heath level. Boom. You see that? That's a quarterly demand zone. You had a gap under it, but you're back above it. Resistance. Old ass resistance, but that's what's stopping it for now. Daily support is 21.4, 2.140. That's daily support. Daily support is pretty much right there on that quarterly level. So if you could close above resistance, that would be good. If you reject here, then wait for a pullback to there. That's just a couple of cents, but futures work different. It just depends on the leverage you're using and all that. But I mean, it got destroyed. You're at an area of potential demand. I mean, every time you've been in that level on this chart or at that area between like a $1.40 to 250 is like a demand zone. Or like the MVRVZ score, a value area. That's where natural gas usually finds value. Now, on this chart, it's completely different. You're making fresh all-time lows. But this could be an inverted son of a bitch and garbage chart. You know what I mean? I don't know what's up with that. This used to be something else or something. I don't know. This is what it looks like now. And Boyle is an ETF, but it's the same thing. It's just this garbage. It's just splits, right? They just keep doing splits. Reverse splits, reverse split, reverse split. And Chevron's heading lower. Chevron is pretty much controls the energy sector. Where are you at? See, XLE looks exactly like Chevron. Literally, but if oil's going down, it's only normal that Chevron would be suffering, right? So I really thought that oil was going to go up for 2023. I thought it was going to be one of the best buys of 2023, especially once they locked up the supply. I mean, that should cause price to go up, right? It did not. And I figured the China reopening would cause oil to go up as well. But China's buying their oil from Russia. Not going to help us, or not going to help U.S. oil or WTI, which is the West Texas Intermediate crude oil. USO is the oil stock. This is usually how I play oil. We had a nice short on oil, but I turned that short off once we got into a new year. So I thought it was going to go up. It still might. It still might. Yeah, it's trading under 2022's open too, so who knows? Is it a buy? Man, I can't tell you that because, like I said, I don't know how you're trading it. I don't know your portfolio. I don't know how much risk you're going to do. I don't know how much you're going to buy. Futures, so you're buying contracts, right? I'm not sure how you would trade that unless you have a futures account. Also, what's the leverage you're looking at? You know what I'm saying? Because the leverage is going to drastically affect your stop loss, right? If you want to buy it just to hold it and you're not going to use any leverage at all, then yeah, you can literally buy it, but and put this as your stop loss because that's as low as it's ever been before. But that's a 50% loss, almost a 50% loss. So, you see what I'm saying? Like, it's a 38% loss if you buy it where it is now and you get stopped out. You're going to lose 38% of your investment. And that's without using leverage. If you use leverage, damn, it's going to be, you're going to blow your account. There's really no technical analysis you can use to something like this because it got absolutely slaughtered. And I don't know the reason for that slaughterage, if you will. I mean, it's off 75%. So, yeah, I mean, technically it's cheap. It's the cheapest it's been since April 2021. So, I mean, there's a lot that goes into it. I would probably wait until there's an obvious uptrend before I would even get involved in it. But if you want to buy it because you want to buy the lows, then yeah, I mean, you're in an area that you could consider a value area. Nat gas isn't like Bitcoin, right? It's a commodity though, and people use it until, until the Biden administration makes natural gas illegal to use. People still use it to warm their houses. So I mean, I don't understand why it got such a big brutal sell off like that. This is something fundamental. So find out what the fundamental reason of that big massive sell off in natural gas is. Research that. And then make your decision on if you want to invest in it or not, okay? Because it is at an investable area, but you can still lose 38% of your investment. And that's without any leverage. 38% is a massive loss on any investment, whether it's $100 or whatever. I mean, 38% it's bad. That means you would need like what 70% move to the upside just to break even. Uh, 62% move to the upside to break even. So you need double the move to go up just to get back to neutral. So you just gotta figure out what is the reason of the massive sell-off, and does it look like that fundamental reason is shifting? If that's the case, then yeah, it's a potential buying opportunity. It's definitely at its lows, according to this chart. And I would trust this chart over any of the other ones, because this is a actual E-mini natural futures contract. Let's pull up let's pull up the COT data on natural gas. All right, since Google's gonna play games, give me 1 second here. Google's acting like I don't have any freaking internet, but it pulled it right up. I don't remember where it was. I found it. Here it is, right there. Oh shit. Natural gas. Right there. See, the red line is commercials consisting of producer, merchant, processor, user, and swap dealers. Basically, your market makers and stuff like that. Non-commercial, green line, large speculators consisting of managed money and other reportables, and the blue line, which is small speculators. Those are the only two you need to worry about. You don't even need this thing. So blue and green. Green is still short. They are less short than they were, but they're still short. Whereas this is your zero line right here. You can see the blue line is long. That's your retail. Retail investors are taking a bet that, I mean, these guys have been short for a long time too. It doesn't really help. I would say you need to get above $3 before you would even start to see a short squeeze. But that's when they started taking it off too. Oh, we'll look at this Friday is when this thing closes. If it gets another uptick, then yeah, you might want to start to look to be a buyer. But this is like, I don't know. I can't explain what the red is, but the red doesn't really matter. Yeah, everybody's still short on it for whatever reason. But just be careful. That's resistance. So you'll probably stay in this range for a while. A breakout of that range that's probably a good would be a good sign. Then the next area would be roughly right in there. So from say $3 to 360, 370. So I can't tell you to buy it, but it is in a value area where you would expect buyers to step up for just the simple fact that people use it. But I'm sure there's articles and stuff out there to say why there was such a massive crash on natty gas. Yeah, you're welcome. Also, I just read the news a few days back longer that the largest potash conveyor belt in the USA collapsed, stopping supply. Nuts, but I want to buy more. So if that stops supply, then naturally it should go up. Right? When supply gets cut off, that is naturally when you would see price go up. NTR was. You said you bought it where? If supply is stopped, they can't sell it or bring it to the market. Yeah, but if the supply has stopped, then the demand will naturally go up just by the fact that supply is stopped. You know what I'm saying? Like it's when did the belt break? A few days back. It stopped. So I mean, I don't know. I'm a price action trader, and you're at a objective level of support. So if you break down here, then you're going to be back under a massive area of what used to be resistance. So then, yeah, you could probably see it go lower. You got to see who's buying it, or if anybody's buying it. As of right now, it doesn't look like they're buying it. Right, you're in a downtrend. As long as you're in a downtrend, usually pops in price gets sold into. This is a clear and obvious downtrend. So what you need to do is you need to wait for something like this to occur, right? You need to make higher highs and higher lows. Then you start buying the lows. Right now, you're in this area. Like you haven't even made a new low yet. Like you gap down there and then boom. Then you open down lower, boom. So it does look like for the last 4 days, people have been buying. So wait for a push up, wait for a higher low, wait for a higher high. Then you can start investing in it to the upside. Right now, you're trying to catch a falling knife. But if it is going to stop right here, this is where I'd start looking to be a buyer. If they can't take it to the market or whatever you said, then they would this would be untradeable. It wouldn't even be tradable. They're going to fix that belt. So the fact that there is less supply should bring prices up a little bit. Who's to say where that, once that supply starts to kick back up, if there is no demand for it and it's seasonal, you would think it's seasonal. I mean, they use fertilizer for other things, I'm sure, than just growing plants, but I'm not going to say what they use it for. That's just a joke, anyways. Yeah, research it. That's all you can do, guys. Research it. Find out what's going on. Where's Apple? Apple's still dropping. Look at that. I mean, damn. We should have took that short on Apple. That would have been a nice trade. Should have took that short. Why is AMD up so big? AMD got a ton of demand lately. It's going up quick, rapidly. Amazon, Google holding everything up, but Amazon could fall shortly after liquidation of that swing high. So be careful being a buyer on Amazon up here. Literally, you just liquidated that swing high. There was the liquidation of that swing high. So 112.50 Amazon puts. Let's see if you can get 112.50 Amazon puts. You probably can't. AMZN, you can probably only buy. And in 10 days, that's AMD. I want AMZN. There we go. So 10 days out, 112 puts are $1.56. But if it gets down here to 112 based on this liquidation, which is probable, you would double that money probably. And that's probably going to happen today. Or you could just buy 113 puts, 113. Right there's 113. So you'd have to get to 112.65 to break even ish. But that wick right there liquidated a massive swing high. So I expect a pullback. I would say that 113, 112 puts would pay today or tomorrow. Get them 10 days out. Don't buy the 3 days out because you'll lose money based on a time decay. I mean, it looks better because it's cheaper, but like I said, the cheaper an option is priced means the less probability of it playing out, of it working. So I would go 10 days out or farther so you don't lose much of your premium from time decay. But since you liquidated that massive swing high, that's a big swing high there. I could see price getting back to 112. So get the 113s because you could bounce right here at 112.16. Now you wouldn't make like 100% on the trade, but you would make a little bit. And they're not that much more expensive. They're just 40 cents more expensive than the 112s. Google is blowing up. So is AMD. Amazon was. Intel not doing much. Microsoft up big. Up above resistance. Microsoft's getting ready to head for another massive liquidation. Not really. Where's Amazon? Yes, Amazon. I like Amazon better. The 113s. Then if it just drops out of sight today and gets bearish, those puts will double in money. Tech is up pretty good today, guys. So I don't know if it's tech has liquidated literally everything, and the next liquidation on as far as weeklies goes is up here. So I don't think I would want to see it start to fall back under 153.08. So right now everything's just moving up. Tech is holding up the cues. What does the Dow Jones look like? It's down on the day. Just took out yesterday's low and probably bouncing just based on that fact, but we know tech is propping up the cues. Yeah, I don't like that. You're making lower highs, lower high, lower high, lower high. Keep Amazon on watch. Obviously, if you do take that trade, you start getting above there, then you would want to get out more than likely. I don't think you'd Because you're so late in the day now. If that's the liquidation and then they were going to look for profit taking, that's where I would be taking profit if I was in the long position. But you are shorting into strength. Look, this thing is still spinning over here. What is up with Google? All right, we're going to wrap it up, guys. Amazon is on watch. Obviously, it just liquidated a massive swing high, so I believe you could trade back down to 112.16 at least within 10 days. And that's just a $200 and something risk. No, it's not even $200 risk. It's a $193 risk to potentially make $200-300. And then on Bitcoin, we're watching clearly the weekly. We're going to wait to see how this hour closes out here. Because it's still trending lower. So you could be right. It could be looking for a stab down below that low day. Instant reversal is what I want to see if that happens. There's also a demand zone right there too. But that's weekly. That's the weekly open. So that's the level we like. All right, we'll wrap it up. You guys have a fantastic rest of your day. Make sure you guys trade safe. Still in Bitcoin long 26,929. Me? No, I'm not. I got stopped out. I took the entry up here. This candle right there took me out. No, this one did. Sorry. That one took me out and we're back above my entry. Love when that happens. All right, we'll see you guys. And for the rest of you, I'll be around all day. So if you got any questions in the Discord, obviously let me know and I'll answer them. Thank you so much for being here. Make sure you trade safe. Make sure you trade smart. And as always, happy trading, everybody.